Good afternoon. We are ready to begin tonight's event. This is called Trading Stats and Analysis. I did one similar a long time ago, a year and a half ago. I'll tell you the story of all this as I go on. Let me get to the title slide. I'm going to skip all the formalities. If you don't know me, too bad. Go to the website, find out. I'm going to go right to the issues tonight because we may have a lot of stuff to go through. I don't know how long this is going to take. We'll see. But I do want to always finish by 6. So let's begin here. This is the title slide that you could have seen if you were looking around or if you got in your email or on the website. This is discussion point. Statistics on your trading investing is one of the most important ways to improve. It's a 2-part follow-up process, blah, blah. I'm going to talk about that in just a minute. This will be a discussion of actual trading stats and a discussion of the key things to be doing to achieve the goal of improving your profitability. Because that's what it's all about, right? That's why we do this, to improve our profitability. How traders and investors spend their time is of paramount importance. After initially understanding how to trade, nothing will return more for your time than the procedures discussed in this event. I do want to make sure that I touch a moment on how traders spend their time, because for the most part, I think it's very, very wrong and probably one of the reasons people suffer, and also probably spend way too much time, and especially way too much time doing the wrong things. There are 2 things to which I credit most all of my development. Number 1 is trade follow-up. It has to do with the printing of charts, and the purpose here is real simple, to see if you are doing what you're supposed to be doing. I find that the biggest problem for most traders right off the gate is that what they think they're doing and what they actually do in their trading are 2 completely different things. And if you think you're doing one thing and you're doing another, you will never improve. There's no chance for success. As a matter of fact, it's amazing how many people follow this procedure of trying to write some kind of trading plan, follow some kind of strategy. They go in the market and they don't do anything that's in their plan. And when they don't make money, they trash the plan and go to something else when they really never even tested that plan at all. The second issue is statistical analysis, to see if what you're doing makes any sense. So maybe you prove, okay, I'm doing exactly what I'm supposed to be doing, and maybe I'm doing some really stupid stuff. So the idea here is to fine-tune and improve what you do. The first one here, the printing and follow-up of charts, is very important. However, this is not the topic for tonight. Just so you know, it's not the topic. It's an important topic. It's the very first step. You can't really get to the second topic till you have the first topic. I've talked about this in some different venues, but I want to get to the second topic here today, and that is statistical analysis, to see if what you're doing makes any sense. This is the purpose of tonight's discussion. First, some basic things, and then on to some more advanced. Trading stats and analysis. Some basics. If you were to be, what we're talking about here, in case some of you are a little confused what this is about actually, is that whether you, and this applies equally as well, whether you're long-term swing trading, day trading, scalping, you finish up the month, you finish up the day, whatever it is, and you have these trades, you made some money, you lost some money, whatever you did. The question is, what do you do now? Just go to the next day, and if you didn't do well, hope things get better? Do you just try, if you're not happy, do you just try some other strategies because what you're doing isn't working well? What do you do? And that's what today is really about in a nutshell. Statistics on your trading investing. This is something I wrote to myself, so I'm going to read it. Statistics on your trading investing is one of the most important ways to improve. This is a 2-part follow-up process. You have to check to see if you're doing what you're supposed to be doing. Then you have to analyze, see if you're doing the goal of either changing or maximizing. In other words, when you go through these stats, you may find you're doing something wrong, or you may also find that you always have room for improvement. So both these apply. This is not a high-level concept that should be done by traders from day one, yet few ever do this. This is not a high-level concept. Everybody should be doing this from day one. I'm going to, in a minute, introduce you to the tracking sheet that I use/used. Before I even bring it up to you, I just want to give you a little history on it. I have not been using it for a while. I've not been using it because at some point in time you become unconsciously competent. Those, you know, the 4 stages of learning, and you get very focused on what you do. It's almost habitual. And for the time that I take, and when I started DTS, I felt my time was better spent on other things. However, I did decide to start doing it November for a couple of reasons. Number one, I kind of missed it and would like to get back to it. I've had some off weeks. I like to know why when I have an off day or an off week, and I don't have that available to me. And also trying to help everyone. To me, this is the most important thing that there is. And I would like to start running for next year's stats on the room. Naturally, I put in there every day a summary of the trades profit and even a quick little jot down on what the strategy was. But I'd like to, but there's no stats on there, and I like to get the stats on there. So when I pulled it out, there were several things I wanted to change because I hadn't really used it in a couple 3 years. I made this sheet originally when I started trading, and that's kind of the point I wanted to get to. This sheet is originally created a long time ago. When I created this, I don't know, some of you don't go back this far, but we're talking 20 years. There was nobody telling you to do this. There was no sheet you could purchase. This concept didn't even exist. I was just the type of person who's like, well, I want to know what I'm doing. I want to analyze it. And I'm kind of a little bit mathematical minded. So I wanted to kind of synthesize it. And I just created a spreadsheet. And I kept kind of building on it. And I pretty much had perfected it by the end of my first year of trading. But I started these stats my first month trading. Hey, Carmen. And the point I want to make is that everybody, there's no excuse for somebody not to do this because today you can buy sheets like this for cheap. As a matter of fact, it's not the purpose of tonight. There's a guy that's an ex-student of mine who he's on the other stuff page and he has a sheet available. I have nothing to do with it. Don't care if you get it or not. But I had a lot of input into a sheet. A lot of the stuff he did was based on things that I taught. And if at the end of this, if you want to do something like that's great. But I don't care if you pull out a notebook paper every day or whatever it is. But you have to have some method of improvement. And to me, this is probably the single most thing I would ever credit to my development, more so probably than even any learning process, any learning type seminar environment or anything taught to me. I think this was more important because this is how you continuously improve and self-teach yourself. So with with that little intro, let's get into a couple things here. What if you're going to track some things on your stats, everybody? What would you like to know? What would you like to know at the end of the day, at the end of the week? What do you want to know about your trading? Give me some suggestions, some ideas. Maybe some of you do this. Maybe some of you use a purchase sheet. Maybe some of you have created your own sheet. Maybe some of you just have ideas. What would you like to see at the end of the day, week, month? Go ahead. Lay it on me. What do you want to see? What kind of things? At the end of the day, gee, I'd sure like to know. I know I made this much money or I lost this much money, but I'd like to know that money I made. Wouldn't it be nice to know what? Win-loss rate by type of trade with profit loss. So you're saying a strategic breakdown, a breakdown of your strategies, right, Steve? I like the sound of that. Wouldn't it be nice to know? I trade three main strategies. Wouldn't it be nice to know at the end of the week I was profitable and 90% of my profit came from one strategy, 20% came from another, and I lost 10% on a third one. Yeah. I'd also like to know the win-loss. Okay, breakout by time of entry. There's something interesting. So you take some trades early in the morning, opening 5 minutes. You take some trades the opening half hour. You take some trades during lunch. You take some trades the last hour. Which of those are actually doing the best for you, right? Right size and time. What else? Is that it? All these people here, and we have two ideas. We can do better than that. Trade with win-loss average. Okay, good, good. What mistakes do I make? Hey, there we go. What mistakes do I make, and how much do they cost? Interesting stuff. Exit type. Well, yeah, but I think I translate that to be your management that you used, Ron. That's actually going to be one of the very good ones we'll get to toward the end, right? Sortino, I have to admit, James, I don't know what a Sortino ratio is. I could have tried to Google it real quick and act smart, but I don't know. I mean, a Sharpe ratio is something that we're going to talk about. Just I don't know if that's the same thing or not. I thought a Sortino ratio was the amount of gin you put in a gin and tonic. Maybe I'm off on that, but I'm not sure. Reason for entry. Well, yeah, that's kind of the strategy, isn't it, Roy? Right? Okay, well, that's very good. That's one of the things that can be tracked too. Is did you use market timing with that? And I really want to know if I follow my own trading plan in my trades. Yeah, well, that's kind of to me, Don. Like I said, it's a separate thing. I mean, that is, and you could put that in the sheet, sure. You could have a little, check marking to this trade actually. And actually, it's a really good idea to do that. It's not a statistical thing, it's more of a follow-up and check thing. So let me do the first two, because these first two are very, very common things. As a matter of fact, if you said two things that have to be, and these are very basic things, two things that would have to be like just on the top of the list would probably be your batting average, which is the percentage of the trades that are profitable, right? You take 10 trades, 6 of them made money, you're batting 60%, we'd say, right? Naturally, when you do that for a sheet like this, you probably, I take anything that's within 1/5 of an R, and I call it break even, right? Because obviously, truly break even an absolute zero trade, I mean, it's fairly rare. And if I have a trade, if I'm risking, let's say $500 on a trade, and I have a trade that makes 10 bucks, do I really want to call that a winner? Do I really want my Sharpe ratio to plummet because my winner was, you know what I'm saying? So I just randomly drew a line and said I got to make at least or lose 1/5 of an R to even have it count. You don't have to do that, just a thought for you. So what percentage of trades you make are profitable? And then your Sharpe ratio, it's just, Sharpe ratio is something used in industries, I don't know where. We use what's called a simplified Sharpe ratio. It's simply your average winner compared to your average loser. That's what it is. So your batting average is winning trades over total trades, just like, you know, if you're hitting percentage as a baseball player. Simplified Sharpe ratio is your total winning trades divided by number of winning trades. In other words, your average winning trade divided by your total losing trades over your number of losing trades. In other words, your average losing trade. Just for fun, I just like throwing this out there because people get confused by this. If you had 4 wins, let's see, we'll have a, whoever answers this first will get a DTS t-shirt when they come off the assembly line, which will never happen. 4 wins, what's your Sharpe ratio for that? All you math geniuses. For those of you that get a headache thinking of numbers, just take a break for a minute. 4 winners totaling $1,200, 2 losers totaling $800. What's your Sharpe ratio? And just to make sure we're kind of clear, because I'm going to talk about this just a little bit, and we have a debate. 0.75, where'd you guys get that number? What does 0.75 mean? Where's that from? Actually, you guys are correct. 0.75 is correct. And the trap is to think it's not your winnings divided by your losings. That doesn't mean anything. What it is your average. So your average winner, 4 trades, $1,200 is $300. Your average loser is $400. So 0.75 is correct. And it's a number that we look at a lot because it can be fairly telling. What is a good batting average to have, everybody? Go ahead. What's a good batting average to have? What would you call the minimum trader batting average necessary? What would you like your batting average to be? 50%? I've had a lot of people say to me, John, you can't make money if you're batting 50%, you're just breaking even. Of course, those people are foolish, but okay. The point of the question is what some of you are saying is that a batting average all by itself is meaningless, right? And like one of the irritating questions I get sometimes is somebody comes in the room and says, what's the batting average? If that's all they're asking, they're brand new to trading, they don't even know what it is. You could bat 30% and make a killing. If you get 1 in 3 trades right, you're making a killing if 1 in 3 of them, I'm sorry, if your Sharpe ratio is 3 to 1, you only need to get 1 in 3 trades right to make money, and you make a killing. So you could bat 33% with a 3 to 1 Sharpe ratio. And it is a very good way of trading. But the important point I want to make to you is that it's very easy to manipulate one at the expense of the other, right? Well, I don't know, Reg. It depends how you manage them. Yeah. You mean for 1 in 3 wins? No, that's not right, Ram. Actually, for 1 in 3 wins, the break even is 25%. You need to get 1 in 4. Think about it. You have a $300 winner, loser, loser, loser. Yeah, right. So you only need to bet 25% to break even on a 3 to 1, right? So what I want to point out to you though is that, well, let me put it to you this way. Let's say I typically bat 50, 55%, whatever. I'd like to make a bet with somebody that for the whole next month, if you bet me $10,000, I'll bet you that I can bat over 90% next month. and doing, let's say 5 trades a day. Anybody want to take that bet? I'll bet you I can bet 90% over my next 5, 20, 100 trades. Does anybody want to take the other side of that bet? Yes, no? I'll bet you I can bet 95% over the next 100 trades. So it sounds like you take that bet that I can't do it. I could easily get my batting average to 90%, Reg. It'd be real simple. If you're going to bet me $10,000, I'll take my first trade. I'm going to set a target for 1 penny. And I'm going to set my stop at $3. Right? No, forget spreads. Forget about that for a minute. Just think about it for a minute. I could take a 1 penny target and have a $3 stop. Right? I may not make money, but I could have a 90% batting average. It'd be real simple. Now, you may say that's kind of a stupid comment, Paul, why are you saying that? Well, there's a point to it because that's what a lot of people do, is that in order to feel good about a higher batting average, they take cheap targets and have bigger losers. So it's all relative. It's very easy to increase one or the other, and I could do the same thing. I could have a 6 Sharpe ratio if you want me to next month. I may not make money, but I could have a 6 Sharpe ratio. I get into a trade. I set a target at 70 cents. I put my stop at a dime. And all I have to do is get 1 winning trade the entire month. I have 1 winning trade at 70 cents. I have 170 losing trades at 10 cents. My Sharpe ratio is 7-1. So you can manipulate whatever you want. Of course, the secret is through good technical analysis is to hold one steady while you improve the other one. And that's the reason we look at these. There's a couple of things. If you're making money, it doesn't really matter a whole lot what these are. The important thing to looking at these then is to see if you're changing, right? You get in a different market environment, it goes from bullish to bearish, and you see your numbers change. It can be a precursor to you saying, hey, maybe I'm going to start having a problem pretty soon. It doesn't have to at the same expectancy, yes. At the same expectancy, if you hold that steady, yes, your batting average will decrease as your average win would increase, yes. Right. That's not what you're trying to do, but I'm saying that's what would happen. So besides these first 2, then I asked you a whole bunch of questions and you gave me several answers. So here's some things that I think I'd like to see. What else would you like to know besides those first 2? Now you mentioned most of these. Everything you mentioned is in this list and it's going to be on the sheet I'm going to show you in just a minute. How much money? I don't think anybody said this one, right? To me, this is perhaps the most important one. Reg, I'm sorry, I don't know what you're saying, Reg. I'm going to keep going. Money made long versus short. Nobody said that one, did they? To me, this is perhaps the most important one, right? You finish a bearish 2 weeks in the market, you're losing money and you're 80% long in your trades. Wouldn't you like to know that, everybody? To me, this is the number one thing. If I had to pick one thing, that's the number one thing I'd like to know. Now, if you're making money, great. But if you had a tough week, we want to go look at these numbers and start saying what happened. Did my Sharpe ratio go from 1.5 to 0.5? Did my batting average go from 52 to 40? What happened? Did I have a percentage of long versus short trades that doesn't match the market environment, right? You don't have to match the market environment, don't get me wrong, right? You don't have to. But you should be keenly aware if you're losing money and you're not matching the market environment. By matching the market environment, I'm meaning if we're in a bullish market, perhaps you want to be more bullish than bearish. If you're making money, I don't care what you're doing. If you're losing money, then you got to step back and say, wait a minute, what's wrong? It's like the old adage, if you're good at what you do, I'm not going to criticize anything. If you're not good at what you do, you better keep your ears open and listen to what I have to say, right? And that's how you should treat yourself. If you're not making money, everything's up for grabs. Money made per strategy, some of you mentioned that, but naturally one problem with people tracking this is that they have to have their strategies well enough defined that they even know what they are and when they're entering them, correct? Money made per time of day entered. Market, stocks, forex act differently throughout the trading day. Perhaps you're a great trader the opening half hour and then you're lost the rest of the day. It would be nice to know that so that you can adjust your trading accordingly. Number 6, money made based on the source, where you fall in the play. I think this is a very interesting one. Whatever you're trading came on your screen for a reason. It had to come from somewhere. Either you have a focused universe. Maybe some of you just use 20 stocks and that's it. Then for you, this is real simple. For me, for example, I have 5 different sources. I have a daily charts that could be the source of a play. I have hourly charts that could be a source of, these are for day trades I'm talking. I have a gap list, I have a gap carry list, and then for me, I also have a fifth source, which could be the room members. I trade with the trading room, and every once in a while, one of those yin yangs throws out something I like, and I make money from it. Just kidding, room members. But seriously, sometimes we do get some participation on something that I like, and that would then go to that category because I didn't even have it on my list, right? Number 7, money when market is up versus down. What was the pattern? One of the things you'll see that I track is the pattern of the market. I'll show you that in a minute. It's not something you can average or add up, but it's something that on a day by day basis you can get an idea. The market pattern in some days is tricky, and this is one that is kind of important to me. I have a bad market pattern day, I know. You may have built in a bias that's hurting you. How many trades had mistakes made? I think Eric mentioned that. And remember, a mistake could be a winning or losing trade. It's not like you look at your losing trades only and say, was there a mistake? You can do something stupid and make money. You can do something great and lose money. You have to know the difference. If you're aware of if you're not aware of your mistakes, you'll never eliminate them. Remember, I told you to get a big cup of coffee for tonight. So you're also going to need your glasses or magnifying glasses or microscopes in just a minute here. Money made per time of day entered. Another one that I think is interesting. Was that on the other page? Well, it doesn't matter. You have to have them defined well enough to identify, and you should have them well enough defined. I think there's a typo in there somewhere. Yeah, I thought so. That's right. General comments that may be stuck out for the day. In other words, a trading log. Now, there's some, if you listen to people, there's some debate out there if you should do a trading log or trading stats. There's no debate. There's no debate. You have to do trading stats. Log is optional to me. Now, I have a little spot in my trading stat thing where, and you'll see it in a minute, where there's a little log area, and I'll make some comments someday. The problem with the trading log, if that's what you do, is that's nice. It's like a dear diary to myself, but what do you do with it at the end of the month? You can't add up your comments. You can't average your comments. You can't analyze. You have to just go back and look at them. So I'm not saying I hate it. If you want to make comments every day, gee, I was hungover this morning, probably shouldn't have traded. Maybe you find out every time there's a football game on the night before you trade bad. I mean, fine, whatever, but I don't think that's going to be terribly revealing in my point of view. It's not a math concept. You can't average your comments, etc., as I just said. This next page here, I want to start showing you this is my own sheet. I created this years ago. This has never been given to anybody. This is not for anybody. Nobody even understand it. It's my own stupid little way of doing it. But you know what? It's my stupid little way of doing it. And I think you all need to have your own stupid little way of doing it. And again, I want to emphasize that if you don't want to pull out a notebook and paper and do this, if you're not good with Excel yourself, you can purchase some kind of sheet. Go on the internet, Google it, purchase it. Again, there's on the other stuff page, there's an ex-student of mine that does this. And it's the best sheet, I think, because he's incorporated some of the stuff I like to review. So this is just kind of the initial page. Well, what does it say here? Enter the things you want and track them and code them. So in here, I'm going to say because this is my sheet. I put all my strategies here. And these strategies probably don't make sense to you. Now, what I'd like to start doing is I want to continue to, I've done this for this whole month. I don't think I told you this. What happened was, as I tried to change some stuff, I screwed up the sheet really bad. I messed it up. And there's a couple things that don't work, as you're going to see on here. I want to fix it, change some stuff, and then I think I'm going to post this in addition in the room to the simpler sheet that goes out, and maybe just let this overtake the other one for next year to keep an ongoing statistics for the room. So you see a couple things that may not be blank on here because I have to redo the formulas. It got badly messed up, but all of the trading numbers are right. There's just a couple of little side things that are messed up. So all the different strategies. What I'm going to do is make these more understandable to people. Again, looking at those, the average person wouldn't know what I'm talking about, and even my seminar students. This is just kind of in my head the way I think of things. But I want to break this out in a little better detail, and over 10 strategies. And to me, you'll notice that the strategies are in here with two different types of entries, because to me the entry is perhaps the most important thing. So rather than having a separate category for entries, I have the strategy with one type of entry, the strategy with the second type of entry, because the entries matter to me. So there's the strategies, and the way I did the sheet, of course, you can, anything in gray is where you write. You can change the strategies here whenever you want, and that'll flow through the whole sheet. So you can change them whenever you want to. Of course, the totals will you have to start new totals over. And then mistakes, various mistakes, and there's some other categories below there, but I just want to get you an idea of the kind of initial page, the cover page. Strategies, time of day, source of plays, mistake codes. These are all from the trades through here are my trades from the DTS trading room. All the numbers are based on $500 risk amount and size to that. Account fees are left off of here for simplicity right now, okay? So here is a sample day. Now, up on top, there are buttons. You might want to take and kind of blow this up to fill your monitor, because I couldn't get this to be large. I was going to use the camera, but that gets to be a real mess going back and forth. So if you want to, up on top, one of those buttons, it's like YouTube. You can blow it up to fill your whole monitor so you can read it better if you want to do that. So this was the first week of the month. And my sheets go weekly. I don't draw monthly totals unless I have to for some reason at the end of the year or whatever. So these are weekly. So this is going to be the first 4 weeks of November. I'm not going to go through every day. That'd be painstakingly boring. I just want to show you a couple of sample sheets, show you a weekly total, and show you the grand total for the 4 weeks. So through here in the gray part is just where you do your entering. And this is obvious here. There's the stock, entry price, exit price, and what the stop was. Okay. And then to the left here, you see 3 different columns. S stands for the source. Number 2 for me, a number 2 source means it came from my hourly chart. A number 4 source came from the gap carry list. A number 3 source came from the gap list. So that means that day, plug was in front of me because it was brought onto my hot list from scanning the hourly charts, and I called that a favorite and had it on the list. GNW that day gapped. NOK had gapped a prior day, and I was still interested in it. Okay. T is for time of day. For me, I divide the day into 5 sections. Number 1 is open to 10 o'clock. Number 2 is 10 to 11:30. Number 3 is 11:30 to 1:30. Number 4 is 1:30 to 2. And then 2 o'clock on is, oh, see ya. Yeah, it'll be recorded, Randy. Probably posted over the weekend. So that's the time of day. And then the strategy. And you'll see the strategies in a minute because it's on a summary page. So they're coded. So I just know the codes to put in. Number 1 is a mattress play, B the tail, etc. So then the sheet does the rest and calculates out and calculates the profit for that day. This is one day trading day. Carries out the profit, blah, blah, blah. On this sheet here, you can see and this is what I want to change here. Because I only have 5 categories for strategy on here, I want to change and make this the source of the play and just leave the strategies default to the summary page. So that's what I was messing around with. I got all screwed up. So time of day, so you can see open at 10 was the best time of day, made all the money then, lost some money between 10 and 1:30. Remember, this is only one day, so you don't go crazy. Now, I don't know why, but since day 1, I wanted to manually enter 3 things at the end of every trading day. Now, I could have Excel pull these numbers out for me, obviously. There's some fairly complicated formulas in here. I don't even know how I did them, to be honest with you. But I wanted to manually type in here a market rating. Now, my market rating, again, this may not make sense to you, but it does to me. A 1 means that it's a reversal day to the upside. A 2 means that it's an ongoing up day in an uptrend. A 3 means it's a reversal to the downside. A 4 is an ongoing downtrending day, and a 5 is a sideways day. So again, this number can't be averaged or added or anything like that. It's just at the end of the week, you'll see the summary sheet. I can just take a glance and say, hey, you know what? This is like the 3rd time in a row I noticed a losing day when the market's sideways. Maybe I should make note of that, okay? So that's what they're there for. Errors down here is that's just a thing for me. When errors say 0, it means I've coded it all properly. That's all that means. So that the strategies and the source of trades and the time all balances out with what the profit was that day. Okay, so that was the first week of November was kind of a boring week to me. So from here, then there's a day for this is for every day. So that was Monday, then there's every day like this, Monday, Tuesday, Wednesday, Thursday, Friday. Don't need to show you every day. Here's the weekly total. So this is a break-even week. This is just a boring week, made 55 bucks gross. And you can see all the stats on here. I'll take a minute to go over the stats, but I want to go to a little more exciting week. So this is the end of week 1. You're just supposed to get an overview of what's going on here, but I'll have some more stuff to talk about in a second here. So here is, and then also is the end of week 1. This is another summary page. This is the tracking of strategies, tracking of mistakes. Notice in here, so there's the strategies for this week broken out. There's all my strategies you saw on the cover sheet, the number of times I traded that strategy, the profit or loss from that strategy, right? Here, the most strategies I had actually lost a little bit of money. Something I want to look at if that happens time and time again. Remember, you never make decisions or judgments from a few trades or from a couple weeks. You got to see the pattern. You got to start taking note of it. You got to start, looking to see if it is a problem. You don't immediately change just because something happened one week. And then down here, some of the strategies I may code as a mistake, saying, okay, that wasn't a strategy. I goofed, and I did that twice that week, playing against the macro trend. I shorted what I considered a climactic that wasn't really a climactic. It was too aggressive. It didn't work. I considered it a mistake. Oh, mismanaged chicken, it means just what it is. It means that I is frustrated because I had a nice winning trade, and I either took, so this is something that could have been a winning trade, but I took small profits on it, or took a small loss when it went on to be a good trade. It means that I mismanaged. I didn't follow. See, again, these are all, this is not designed for the public. I'm just showing you what I use. So it's designed for me. I know what it means. It means that I'm mad at how I managed it. I didn't manage according to my plan. I chickened out and gave up money because of that. Okay. By the way, this is the basic stuff. This is basic stuff. So here is now the second week of November. Here's a Wednesday. Made like 1 hour, 490 gross, 3 trades. Same sheet you saw just a minute ago. Nothing new on there. That's just a Wednesday, and here's the Thursday from the week. So Thursday was a really nice day. There's a big trade on there, a 3-hour trade out the door, one losing trade for a full hour, a winning trade, a winning trade. So a couple of 1-hour winners, is an hour on here is like $500. A losing trade and then a big winner. Kind of the way I like to do the day. These were first 2 entered very early, second 2 during the next hour of the day. A real nice day, almost the whole week in one morning. That's the kind of thing you want to see. The second week in November, the first week was just a blah, barely made any money. The second week was a good week. Here's the weekly totals for the second week. So it was a 10, 11-hour week, about $5,200, 10 and a half hours for the second week totals. So if you take a look here, this now totals every day. So naturally you have just, your profit numbers in here. And then there's the summary, I can barely read that, of the source of the play is not working. That's one of the things I have to fix on here because I screwed it up when I was trying to change some stuff. And that's why this check number is off. It's off by the amount of profit because none of that is being reflected because none of it's coded right. But then the time of the day, you can see how the time of the day broke down. The opening half hour just made a little bit of money. All the money made between 10 and 11:30, encompassing the first and second reversal times. That's when all the money was made. A little bit of money. Then I don't trade much at all. After that, there was probably one trade the whole week that was done at lunch that day or whatever. Steve is, yeah, thanks. I'm sorry I didn't explain that. R is a risk unit. It means if you're risking $500, every $500 is one R. Where do you even see that on there? Yeah, but that's what that means. I had a column on there for R unit profit. I never finished that, so that's. Oh, okay, yeah. It means risk unit. We talk in risk units, Steve, because anybody could be trading a different risk amount. Somebody newer may work their way up to $50 risk per trade. Somebody more experienced could be trading $1,000. So if you take a trade and you have a 50-cent stop and you make $1 profit, it's a 2R trade. It means if you risked $1,000, you'd make $2,000 profit on that one trade. If you risk $50, you'd make $100. You're making twice what you risk. That's how you make money trading. It's how you look at it, judge it, share size. It's everything in trading. Long term, short term doesn't matter. Okay. It has nothing to do with the percentage the stock goes up. It has to do with how you size it, which is based on how you're able to enter with the stop that you have on the chart. Okay. So then here's a little summary. Here's the day-by-day profit, and then here's the market rating for every day. So on this day here, number 3 means it's a reversal day to the downside. Those are good days for me usually, and it was. 4 means it's an ongoing down day and a downtrend. 1 means it's a reversal of the upside. 5 is a sideways day, normally a tough day. I happen to have a couple good trades that day. And number 2 is an ongoing up day and an up day, in an uptrend. Ignore the average because that doesn't mean anything. The sheet just did it. There's no sense in averaging the market rating. It's just there. Number of plays. Again, while I could have the sheet do that, I'm keenly always aware of the number of trades that I take because there's always a tendency for people to overtrade, including myself, and I always want to limit that. I ideally would like to do 3 trades a day. Some days you need to do more because you just don't get the right entry on something and you got to do a couple more. Anytime I'm over 5 or 6, if I'm making money, that's okay. If it's because I'm losing, I'm not happy about it. So I always am keenly aware of that, and I manually want to see that. So, and this is where you just kind of, you don't have the stat on this per se, but you just kind of cruise the thing and say, wow, here's 3 trades, made a killing, and here's 7 trades, made nothing. Why did that happen? Was it okay, or did I give back money? And that's just, again, another thing you want to be aware of. Let's stop for a minute and talk about this. The time that you spend. Some of you right now may be going, geez, this is a lot of work. What do you expect me to do this or something? Well, I don't expect you to do anything. The question is, what do you want to do? If this is going to be your business, let me ask you guys a question. I haven't done this. If you could all participate with me for a minute, I'd really enjoy this because I haven't done this in a long time and have people respond to it. How many of you in your lifetime have worked for somebody else in a salaried type of job? Give me a 1 on the screen. And that should be almost everybody in here. In your entire life, when have you ever worked for somebody else as a salaried person? A person where you're paid X amount for the month, year, whatever, and you don't directly get paid for more hours. And maybe indirectly, sure, but you don't directly get paid. You don't turn in a time card saying, gee, I worked 10 hours, give me some more money. Okay, for all of you number 1s out there, how many of you worked over 50 hours? Give me number 2. How many of you 1s worked over 50 hours a week for somebody else without actually being paid for it? Right, and I'd be in there too. How about give me a 3 if you worked over 60 hours a week for somebody else? Give me a 3 if you worked over 60 hours a week for somebody else and didn't actually even get paid for it. You know where I'm going here, right? I can keep going, but I'm going to stop. I could probably stop out at 80, right? We all work our butts off at a job. And then it's funny. I have traders want to be independent businessmen and run their own business, meaning a self-directed trader. And they go, wait a minute, you want me to fill out the sheet? What do you think? I got all day to sit around and do this, right? Yeah, but the point is, Mark, you're working for somebody else, right? And now we're saying, hey, you know what? Here's what traders do, most traders. They spend 95% of their time sitting in front of the screen, glued to the screen, hand on the mouse. They don't have a clue what they're doing. They spend 5% of their time preparing, and they put 0% of their time following up. That's what most traders do, and it's disgusting. I think you should spend a couple, 3 hours in review every single day if you're a day trader. If you're a swing trader, a couple, 3 hours every week. Now you say, Paul, wait a minute, you want me to work 8 hours and then prepare? You want me to work 12-hour days trading? No, I don't want you to. I want you to have a good time and not work much at all. I want you to work 3 hours in front of the screen day trading. That's it. Don't ever sit there more than that. Never. I don't care. Don't do it. Unless you're making so much money and that's what you do, great. There could be some micro scalping styles, but the chances are you're not successful doing that. 3 hours in front of the screen. 3 hours following up. Doing what? Doing this type of stuff. Following up and look at this stuff. Get familiar with these numbers. Understand what you're doing every day. You can literally self-teach yourself if you're very good at following up at what you do, because you can make up any strategy you want and then throw it out and say, oh, wait a minute, if I change this, maybe it works. And that is exactly what you need to do. So again, I created this sheet myself. I'm not an Excel expert. I'm not a computer expert. I'm just like most of you. I just pulled on an Excel sheet and started playing with it and adding to it and adding to it. And then I went on this mysterious thing called Google, where if you have a question, it actually throws the answer to you almost immediately. if you don't know a formula. But again, if Excel sheets aren't your thing, pull out a notebook, pad, and paper, or go buy one of these and just figure out how to do it. Okay. But mine, yeah, not a chance, Reg. I wouldn't sell it, number one. I would give it to you, and I'm not giving it to anybody because it's not made for you. I'd get inundated with questions, and you're asking me to give up huge amounts of time supporting this when you can buy one that's 100 times better than this for $100. So, not a chance. And besides, this is garbage. There's really nice ones out there. This is garbage. I'm showing it to you because this is me. I want you to just kind of get that concept. This is me. This is what I've done. This is what I do, and I'm going to return. I got really excited doing this, to tell you the truth. I actually felt a little guilty that I had stopped doing it sort of the last 4 or 5 years. So I'm going to go back to it. Yes, Reg, if you act right now, you can get this sheet. Normally sells for $750, but now down to $250. If you act right now, we'll give you 3 sheets for the price of 2. If you have for your credit card right now, it'll only be $26.95 plus shipping and handling. If you act right now. Sure, Reg, you can do it on this one right here. Like I just said, just all you have to, any sheet that you have, Reg, any sheet that you get would allow you to enter strategies. And some of your strategies would be a tier 1 gap, Reg, tier 2 gap, tier 3 gap. There's your strategies right there. That's what I could do on this sheet. I just put gaps in one category, and then I know by my entry, because I have a gap entry, it's a tier 1. If it's the gap plus a different entry, it's a tier 2 or tier 3. I just know all that stuff in my head, but you can do whatever you want. Yes, that's right. Thank you, Ron. If you have now, you also get a free t-shirt. All right, so let's keep going here because this is still the basic stuff. And then here's the summary sheet for the second week. So this is your trading set. So here, Reg, is where you'd have that. In that cover sheet, you would put whatever you want. Here's what I call my strategies: mattress with be the tail, mattress with secondary sign of strength or weakness, major support, major resistance. And by the way, to me, the buy setups are in here too. I know it doesn't make sense to you, but to me, it makes sense. So I categorize my strategies based on this. And there's a summary of, the week made that much money. So the question is, what strategies help make or lose that money? And again, you can't overreact to any one week anytime, right? You can't just say, okay, this strategy here, get rid of this. Doesn't work. Doesn't work that way. Especially with gaps. Gaps, sometimes you get the home run trade and a couple 3 don't work. If you're on the week, a couple 3 don't work, it looks terrible. But you have to look, bigger picture at a lot of this stuff, all right? And here's a fun little, again, this is how crazy I am. I did this sheet for myself. This is the last page of the sheet. And it says, and this will change, at the end, it'll say whatever is appropriate. So it says, you have properly quoted all the time and source, you've properly quoted your strategies. If I didn't, see, the thing here is to go back and look at that sheet's very painstaking, and you miss stuff. And here's a summary sheet that tells me, yes, I entered it all properly. Remember when I started the sheet, commissions were $17.50. That was a huge issue to manage, because if you take too many trades and they're not big winners, it was typical to have a third of your profit going to the broker. Some people had all their profit go to the broker. So, I had a commission warning here for me. Your Sharpe ratio. Now, it says your Sharpe ratio is to be concerned about. My Sharpe ratio, go back here. Sharpe ratio was, I didn't even stop on this. Sharpe ratio was 1.6 that week. And batting average 61%. The batting average was actually a little artificially low because, and this is something else I have to fix, and just in case you guys do this, these two numbers here are averaging these numbers, and you can't do that. You can't average averages. And if some of you are mathematically inclined, you know what I mean. If you're not, you're probably confused. Don't worry about it. But you can't average averages. It doesn't work. It could work, but in this case here, it doesn't work for the success ratio because, like Friday, there were 2 trades, and in other words, you can't average that number. Didn't mean as much. So actually, the success ratio was a little higher than that. And when I revamp this more this month to start using again in January, it'll fix that up. Where am I in this? So there's second week in November. So then here's your Sharpe ratio. So I had a very high threshold set here. It doesn't say I did a good job unless I'm over 2, which is a little crazy. Actually, yeah, I mean, I don't know. When I set this up, I don't know what I was thinking. 2 Sharpe ratios off the chart good. So I didn't give myself a pat on the back unless I hit 2. So it said it was 1.6, which I think is great, and it said it needs work. So screw you, sheet. I don't like that. Success ratio is great for any trader. Long versus short, you need better shorting stocks. Now take a look at this, by the way. shorting stocks, I was, where's the numbers? Long short. I was all profit short. All profit short. Not always the case. And this was the second week in November, right, the 9th, which was a flat week. It was pretty much sideways. Yeah. Yeah. Well, we were up mildly a little bit every day. So again, if I had a big losing week, or if you had a big losing week, and you sent this to me, and you lost all your money on the short side in a week when the market went up, I'd say, okay, you got a problem. But obviously, I'm picking on the right thing. Picking on bearish gaps, picking on extended patterns, picking on unique patterns that are heading down. So again, if you have a good week, it's not a problem. But when you have a bad week, you want to zoom in on some of this stuff. But interesting, 100% of the money that week was on the short side. How do you handle longer swing trades or opens and closes often in different weeks? Yeah, it's in here, Steve. It's extremely complicated. I don't want to go into it with you because to tell you the truth, Steve, I don't remember. I did the sheet so long ago. But if you have, oh, I cut it off, that part. Um, but in here, there is, well, you can see some in here for overnight. You see in here about overnight long, overnight short, because you have to have it like mark to market every day, and it's really kind of confusing. You have to put an adjustment number in every day. It's kind of a pain. If you are only swing trading, it's simpler. I mean, you can just run the sheet week to week if you want to. If you're day trading and holding stuff over at the same time, if you put it all in one sheet like this, then there's a separate spot. I had none of those in this account for that time. So I just, to make this sheet look bigger, I clipped it off. But it's kind of a mess. I remember having a headache from doing that. So it's where if you're just starting from scratch, it may make the sense to pull out one of those Benjamin Franklins and give it to somebody. You guys got me lost. So here's the final summary for the 4 weeks. Now again, in all fairness, this is 4 weeks, so it's all of November, but the very last day, because I do it weekly. And also, in all fairness, while this is a month over the goal, in all fairness, I want to tell you, this month, as of this morning, I was break even. So the first week of this month, I'm just flat. Just had a couple of, just 2-3 mornings, couldn't get past them, lost a little bit, didn't make it back. So I'm just flat as of this morning, I'm just flat. What makes your stats are a must yellow legal? May I ask you what stats are a must yellow legal backtrack? Well, Reg, it's really a lot up to you. I mean, I already told you what I thought the musts were. I mean, I think your long short ratio, your Sharpe batting average, and then again, if you have your strategies defined, your strategies. I mean, to me, it's all kind of must have because why stop and leave anyone off? Because any one of those could reveal something to you that makes you a ton of money in the future. So why pick this time to be lazy about anything, right? Or why not get a sheet from someone and fill it out properly? So here's the total for the 4 weeks. Sharpe ratio, what does that say? I can't even read it. 2.35 or something. Well, expectancy ratio is something a little different, but yeah, I have a Sharpe ratio on here. So success again was a little bit low on here because the average of the averages, I know that the low batting average days were 1 or 2 trade days on Fridays. Sharpe ratio is good because they had a couple of big winning trades in here that month. And what else? So there it is. And again, whenever you have an off week, to me, it's extremely helpful to look at this stuff. I think you all get the idea. And I want to emphasize something to you, and I'm not saying it to brag on me at all. I'm saying it just as an eye opener. I started doing this my first month of trading, and there was nobody out there telling me to do this. There was nobody out there that even offered this information like I'm doing it to you. There was nobody that sold a sheet. This was a long time ago. This didn't even exist. This is just me saying, hey, you know what, if I'm going to do this, I want a handle on what I'm doing. And I just think it's important that you have that. Do you rate your entries and exits? Well, yes, Paul, in the sense that they're all coded by strategy. And then when I enter that strategy, if I messed up, I put a mistake code in. So I don't rate them as a grade. They're either correct or incorrect. So it either goes into the strategy column or it goes into the mistake column. Every trade is either a strategy that gets credited plus or minus to the appropriate strategic number, or it goes to the mistake column. I showed you that a second ago. Can you explain the difference between Sharpe? No, I'm not going to explain it. Read the book that I recommend to everybody. Number one trading book you should read is Trading Way to Financial Freedom by Van Tharp. And that is, let me post for you here. You guys, if you're here, we're not done yet. I have the advanced thing to do, and we have 5 minutes left, so I got to pick this up. I don't like these to run late. Hopefully you all know about the free stuff page. Be there. And there's next to that is the other stuff page. And let me post that for you here, because that is where the book is that I recommend. And Reg, you need to read that book. I'm surprised at your advanced state. You haven't read that book, Advanced State of Trading. It's the number one book I recommend. It's on that page. There's the best movies to watch. There's the best book to read. I've written 2 books, and they're not even on my webpage. Okay, so take that for us. And then there's a trading journal spreadsheet. And this is by Greg Thurman, who's an ex-student of mine. It says that right there. Again, this is just him. I have nothing to do with this. I personally could care less, but I like the sheet a lot because he's incorporated a lot of the things I think should be in the sheet. And I've gone through it and I like it. I just never switched over to it. Does TraderView provide? I have no idea who TraderView is or what they provide. Expectancy, bad sharp. Yeah, sort of, but there's a big debate about that, Jay. I think I actually emailed you about that. But anyways, it's not, I think, an appropriate concept for right now. Let me go on to the next topic real quick, because all of that is all great. It's all well and good, right? But have you ever gotten an employee review from an employer? Anybody ever gotten one of those? That should be everybody, right? Everybody at some point has gotten an employee review, an employment review, whatever you want to call it. And you get graded, right? And they'll go through a bunch of categories. You did A, B, C, D, you did 1, 2, 3, 4, you did satisfactory, not satisfactory, blah, blah, blah. And it's somewhat helpful because somebody's telling you, hey, you stink at this, right? So you can take it for what it's worth. But what's the problem with an employee review? What's the problem? Okay, you're good at these 5 things, you stink at these 5 things, see you next time. What's the problem with it? Maybe bias. Yeah, no, the employer's always right. He's the employer, he's right. It should be one-sided. It's his point of view that matters. Right, 2 and 3. Well, follow-up, you're getting it there, see what I'm getting to is, it doesn't really tell you right. Eric, you're good. It's not really telling you what to do to improve. Most good employers do, but generally you get this list of what you did good and bad. And what I just showed you is kind of that thing, right? What I just showed you, the tracking sheet, it's kind of like your employer review saying, okay, you did good on this, your Sharpe was this, but then the normal trader is going to turn around and say, okay, what the heck do I do with this information, right? So this is where the advanced topic, to me, comes in, the advanced topic. All the basics are great. They can identify problems and they can show you if you're changing, right? And that's another thing, even if you're doing well, you may start changing and you want to see that happen, and it can identify problems, right? But what about when you're doing okay? Some problems just don't stand out. You may not have a problem, but you may not just be real good yet, right? What if you're just kind of cruising along and you're just making a little bit of money, nothing's standing out to you? What do? You just keep doing this for the rest of your life? Well, this is where you get into the advanced things you should be doing. And again, when I say advanced, it's only because most people don't even recognize these, but it's what you should be doing from day one. Can anybody tell me now what else you would like to do in terms of looking at your past trades? Because this, what I'm about to do, the next 5 minutes here, the closing, is where you will really invest your time wisely and end up making money from what you do. What else would you like to know? So you just saw my sheets. Boom. Trade management? Okay. What would you do though what would you do to improve your trade management? Put a sheet and have that sheet grade your trades, grade your management, A, B, C, D. Kind of your trade manager, either followed it or you didn't. So it's kind of in there already in my sheet in a sense. How do you get better? Various strategies and implement a test. Take various and implement. Okay, you're getting there. Good. Rich, you too. You're getting there. Back testing. Now, when you say back testing, it's exactly what this next slide says. However, you have to be careful. What 99% of you think of when I say back testing is worthless. I'm not talking about back testing strategies. There are programs out there and scanners. You pay premium to back test a strategy and you plug in there. I went long over the 5-minute high. Whenever the stock gaps more than 1%, how would that have done since 1932? That's completely worthless. It's not completely worthless. It's mostly worthless. If you don't believe me, just go try it for a month and then you'll email me and say that was kind of worthless. However, the back testing that really makes the money is doing a what if analysis on your recent trades. In other words, taking your own trades, going back in time and saying, what if I did something different? What would be some ideas, everyone, if you went back and look at, let's say you're a day trader, your last 20 trades. Wouldn't it be nice to know, what if I did this? What would have happened? Can you give me any ideas, some things you might want to experiment with? To say, gee, what if I mean, when you trade, you probably think sometimes, what if I did this? Would it work? Well, why don't you answer the question for yourself? Pinpointing entries is important. Just like a car dealer would say, you make money when you buy the car, not when you sell. Mark, if there's one or two famous quotes from me, it's that the entry is everything. Period. The entry is everything. Period. There is no argument with that to me. You can say whatever you want. I don't care. The entry is everything. Period. Naturally, you have to know a whole bunch of stuff. But when it comes down, you know everything and everything's equally important. Okay, the entry is what's important. The entry is everything. What if I held it? Well, what if I held the trade? Hey, Derek's got us going here. What if I held the trade a little longer? Day of the week entries, time to, what if I took more profit? Okay. Well, here's a bunch of things you could think about. What if you took all your day trades and let them go to the end of the day with no management? Would I would have done better or worse? What if I doubled the size of the stop that I use? What if I just all of a sudden, what if I just went back and said, let's reevaluate everything and pretend I had twice the stop? What would have happened to the trade? Does anybody know the answer to these questions for your own trading? What if I took all 1R targets? Now, an important comment here, I don't think that this should be part, it can be, but the thing is, this is always going to change. You can make it part of your regular sheet, or you can make something you pull out from time to time to check new concepts, right? I know taking entries on Monday gives me better results. Okay. So what I did was here, and I did not do this for the entire month, but I went and I took 1 week, and I asked the what if question, and I asked the what if question, what if I just, instead of managing, what if I just let my trades go to the end of the day and exited at close? What would have happened? So I went to, you may not do this all the time, but tracking sheets as you need them and is mandatory when starting out. So here's that. This is the holiday week. This is Monday, Tuesday, Wednesday of Thanksgiving week. So there's 5, 6 trades from Monday, 3 from Tuesday, 2 from Wednesday, and the profit as it was $3,800 profit. Okay, on a $500 risk. Good 3 days. But I asked the question, and the reason I picked this week is I knew that the best trade in here, this fuel cell short, as great as that trade was, I left half of it on the table. So I asked the question, what if I went back, and I did, and I said, what did all of these trades close at that day? And then ipso facto, the good thing about Excel is Excel just changed one number in the formula, and boom, there's the new profit numbers. Look at that. Almost double the profit. And you know what I had to do to get double the profit that day? All I had to do was stay away until 3:55. That's all I had to do. Now, is that true for every day? Not necessarily, and that's what you have to check out for yourself every week, at the end of the week, at the end of 2 weeks, all these different questions. Vary the size of the stop that you use. Go back and back test what you did. Back testing is trying different approaches to what you already did. Why is that so important? Because they are the trades that you decided to take, not theoretical trades out of a mathematical formula. The reason back testing, the way you probably think about it, is a waste of time is because there is no back testing formula that works, period. Nothing. You can play with it all you want, you can screw around all you want to, have fun, but the truth of it is there's some art involved, and what you need to do is to go back and look at what you actually did. What you actually did, what you decided to enter over the course of 2 or 3 weeks, and then decide, okay, here's what I'm doing, how can I improve on that? Does that make sense, everybody? For some of you, you maybe fell asleep or tuned out a while ago, that's fine. But I have to tell you this, for coming to a free event, this is the thing that could change your trading career more than anything else. This is obviously stuff I teach to some of our students. It's not like the secret sauce formula. It's just something that you have to do, and it's something that all of you should know to do, whether you are experienced or new or just learning. This is the most important key to the learning process. Is if you just fold up your trades at the end of the day, go out to the bar and have a drink, and come back the next day and say, well, I hope I'll do better. Well, congratulations, you're part of the 95%. And go out there and start looking for another job in a couple of months, because that's where you're going to be. So this is the way that you help yourself to improve. It's the greatest single thing you can really do for yourself. You can read that slide there. This has nothing to do with tonight's talk. I always present that for those of you that are looking to day trade and do not have don't have available at the moment the requisite capital. There's a way you can do it through a prop account. Email me. And you can be trading 10 to 1 leverage, keep 95% of your money, and it's all safe and proper and everything else, or I would never be showing it to you. This is not done by me. It's just a referral I do to somebody I've been working with for years who does this. Email me if you're interested in that. And other than that, that's not appropriate. Boom, 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 boom. That's it. 6:05, because I knew this is a long presentation. I hope you enjoyed it. Does anybody have any questions? I'm going to call this officially over, but I will take any questions if you want at this point, so that those you want to leave can leave. Hey, Paul. I love your name. Paul, this tells me that a person with your experience still faces the same questions that really trying. I guess you could call it, I don't drink, Paul, but from what I understand, I guess it's like being an alcoholic. I think, they say that you're never cured. It's a recovery. You always have psychological issues, Paul. The difference is what you do about them. There is a way to fix psychological issues, and this is the way to do it. Psychology is fixed by having a trading plan that you use and refer to, and a follow-up method like this to give you confidence. It absolutely is. I still get into issues from time to time, yeah. And that's why my biggest motivating thing is I'd like to continue to run these stats for the room, because right now I keep a tracking sheet for the room, those of you not in there, that has all the entries and exits, the profit for the day and all that kind of stuff, but there's no stats on it. And I think I'd like to get those stats going so we can analyze it maybe every week, so sit down with the room and analyze it and go over what we did that week. It's me, what I did, but I get input from the room, and they offer suggestions sometimes. So it's something that I want to resume doing, primarily as an educational thing, but secondarily, I've had some days where I finish, I go, what the hell was that all about? What did you do there? And I normally can just look and know, because this has become second nature to me, but it takes a long time to get to that point. But to the point of your question is, yeah, you always have to be on top of this stuff. Yeah, you do reach a point, the 4 learning things. You start off, I always screw this up, you start off consciously incompetent. No, you start off unconsciously incompetent, right? Meaning that you don't know what to do, and you don't even know what you're doing wrong. You don't even know what you're supposed to do, right? Then you become consciously incompetent, which is a huge step, especially as a trader. When you become consciously incompetent, it sounds terrible, but it's actually a big step. It means that I stink and I know it, and I need help. It means, wow, there's a lot to learn and I don't know what I'm doing. Then you become consciously competent, where you forcibly have to think and constantly. That's like where I am in golf. I struggle with every swing and got to think about it and blah blah blah. And then you reach like who's the greatest golfer in the world today? Whoever he is, he becomes unconsciously incompetent, and that's the way I am trading for the most part. Yeah, I joke around when I'm teaching seminars. I'm telling people that I go through this complicated process, and I tell people I was just thinking about what I am for dinner that night. I'm actually not even joking. It just kind of flows out of you at some point, and it's the way I am most of the time. But nevertheless, you get these little spirals. You get a couple bad trades. You say, what the heck was that? You hesitate on the next trade. It's the trade of the day, and you miss it. That stuff happens to you, and it can wear on you if you don't have the stats and the confidence to back it up. And as a new person, I feel for you because it's tough if you don't have the confidence or the knowledge you can do it, and you have a bad copy. One of my favorite events is going to be the last Saturday coffee at DTS from a couple weeks ago, 3 weeks ago. Listen to that one because it just talks about that thing about confidence and losing trades and the fact that you can be the greatest trader in the world, and 1 in 8 times, one in eight times you're going to have 3 losing trades in a row. You just are. You just can't avoid it because we play odds. And if you're a new trader, that's devastating. And then you start questioning, do I even know what I'm doing or not? You may be trading great and you get a couple of bad trades in a row or losing trades and you think, boy, I got to change what I'm doing. And then you get in the spiral you never recover from. So all this is important. It's doable, but I think very tough if you're on your own because you don't have somebody over your shoulder, which is what I try and offer to seminar program members is, hey, I'm here over your shoulder saying, send me the trades. What are you doing? Let's look at them and say, okay, those are great trades. Just don't worry about it. What are you going to do? Somebody asked me about a trade in the room yesterday. It didn't work out for me. I said, you know what? Honestly, I would have done that trade. It was a good trade. Just, that's what happens. That's a losing trade. Move on. And that's what's tough if you don't have that because it's very hard to tell good losing trades from bad winning trades sometimes, right? Yeah, Roseanne, hi. Somebody just asked me that. And if you're just swing trading, I would just do it weekly or monthly. Yeah, a similar sheet weekly or monthly. Depends on how often you want to do it. The issue with swing trades is if you're just doing it for yourself, you can just do it based on close when you close out the trade. But most of the time we do things based on open, booking the open profit, mark to market it's called. So at the end of the week, you'd have to pretend your trade was closed and then you have to make an adjustment for it the next week. It gets a little complicated, but there's no need to do that daily on a swing trade. That'd be silly. But what some people have though, Roseanne, is they day trade and they hold stuff overnight and then you kind of have it on the same sheet and that gets a little complicated too. And that's again where I'm saying to you, to be honest with you, I don't see it's worth your time to try and create your own thing. Yeah, I really don't know what Greg charges for his, but I think it's $120 or $107. Is somebody using his? I know some of you used it. I've heard nobody say, but it's great. And it's a one-time fee, but I'm not sure why you don't want to spend the time creating your own thing. It's if you're trading, it's a really cheap investment when you look at all the other stuff you do. So wherever you go, if you don't like what I'm saying, just go Google it. There's tracking sheets. Go find one you like, and there's even a learning curve though to use somebody else's because you got to know how to input it properly, right? Derek, the room is $179 for the month, and it's discounted annually. It's like whatever comes off I don't know what it is, but and you can see that if you go to the website and go to the services section, and there's a great little summary of the room in there. I can post it here for you if you want. And if you're on the site, it's subscription services, but if you want just a great little summary of the room, and on there it'll also direct you to where you can go if you want a trial or a normally I tell people just go find it, but I was in a good mood. Oh, thanks, Paul. It's less than 2. Oh, Tim, okay, yeah, thanks. I think isn't there 2 versions or something, Tim? I don't even remember. Because I'm thinking there's 2 prices. I don't know why, and I don't know how you'd have 2 different prices, but maybe one comes with a factory warranty, one doesn't. I don't really know. But you can check it out. Again, if you go to that other stuff page, click on it, go ask Greg a question. Tell Greg hi from me if you email Greg Thurman, I mean. I haven't talked to him in a long time. Thanks, guys. Have a great one.